Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, April the 3rd, 2017, and this is the Daily Report for Gold and Silver. We do have a mixed bag in the precious metals markets, with gold trading higher on the day and silver trading nominally lower. Gold, first, we're looking at most active June contract that has now become the continuous contract. So whether you're seeing the symbol M7 or tic-tac-toe F, they both represent the same contract month. Nonetheless, trading up about $3.60, a net gain of almost 0.3%, closing at $12.5480 with a low today of $46.40 and a high of $55.90. So as you can see, we're only about $1 or so off of the high. Over to spot gold. Spot gold currently trading $12.5270, net change up about $3.72 on the day, $44.68 on the low, and $53.70 on the high. When we look at silver, and this is the continuous contract of silver, as you can see, it is fractionally lower. I'm going to put it in the unchanged column at $18.25, the low on the day 09, and the high $18.29. No doubt we are off to a nice start, considering that gold is currently trading up about $4 on the day. But more than that, significant to me is the low of the day at $12.46 and our current level of technical support. And I'm putting our technical support level at about $12.48, $12.47. When we look at this particular price point, we can see we have an absolute fib harmonics, our longer term fib retracement, which of course begins at these lows at 1040, the all-time lows ever since the market came down from 1900 up till last year's high. That is our first level that we're looking at. And then the second fib retracement starts from that 1375 and goes down to the recent low that was achieved just prior to the conclusion of 2017, in which the market was trading at about 1122. And that is a 50% retracement at 1247. So when we combine the two of them together, it is a pretty strong level that I believe, on a technical basis at least, should provide some eloquent support for gold pricing. Now, what are we looking at on the upside? I believe that it shouldn't be that hard for the market to take out this former high. I mean, we're at 55 and these highs are at 65. So we're looking at simply a $10 spike in the market to the upside. Assuming that that does happen, this would of course become our new level of support, but our next real level of resistance will not come in till about 1277, and then above that a zone between 1307 and 1314, which is yet another fib retracement and fib harmonics with these two different time cycles. We are looking at a daily chart, although this chart is in Japanese average format, because if you recall from last week, we noticed the potential for a little bit of weakening in the market, because what we saw was absolutely a period of consolidation in which, when the market came up from about $1,200 and hit these highs just below $1,260, we could see that the body size contracted. We had a return of a lower wick here and a lower wick here and here, and then we had these sideways candles going into the end of last week. Of course, now we've gone back to green. Many times you will see that key pivot or reversal point simply allude to a period of consolidation rather than a pivot point. We are long this market, and my recommendation is, for those still maintaining long position, maintain your current stop level, maintain your current long position. For those that pulled profits, we will look for some sort of a dip to re-enter from the long side. And of course, I will send out a special trade alert notifying you via email as well as SMS text message. Silver has certainly been in a world of its own when compared to gold pricing. Typically, they will run very much in tandem, and we're simply looking at differential between percentage gains or percentage drawdowns. But with silver, we've had hard upside spikes, such as what we saw on Friday of last week. And then, for example, this week, now we have a doji that is a gravestone doji, but just prior to that, as this body size was bigger, it was very, very much like a hanging man or a hangman in terms of any kind of candlestick pattern we can identify. We did see a shooting star here, almost two shooting stars right before the decline. But the key is whether or not silver prices can maintain above a 50-day moving average. That is this solid blue line here. We are neutral in terms of silver and positions, but we do want to take a serious look at this market as it has outperformed all of the other precious metals in the first quarter of last year. In other markets that we follow, U.S. equities under some pressure today with all of the major averages closing in negative territory, but very, very modest moves to the downside. 20,650 Dow Jones Industrial Average, putting it down about 13 points on the day. When we look at the Standard & Poor's, down almost 4 points at 2358.84. As I said, fractionally lower on the day. And lastly, NASDAQ actually taking down about 0.3%, a loss of 16 points at 58.95. Now, dollar index was much higher earlier in the day, but did close out fractionally higher at 135. And then lastly, do want to take a look at crude oil prices, which are down today, down about 37 cents per barrel at $50.23. I would not be surprised to see some weakness enter the crude oil market. If you recall from last week's trading activity, the market absolutely had found really good, solid support at about $47 per barrel. We can see these series of lows here. And then last week, of course, we saw this market not only break through the 200-day moving average, but actually get close to challenging the shorter-term 50-day moving average, and that's what this dashed line is right here. Today, though, we do have an engulfing bearish pattern, and if we get confirmation, meaning in tomorrow's trading activity, we get a scenario in which we get a lower low and a lower high, and the market closes below its open. That, of course, would indicate a red candle. Then you would get an engulfing bullish confirmation, and that would certainly signal lower pricing. I would look for the market to trade to initially about 48.50. That's where it could find support. That, of course, is the 200-day moving average with very, very strong support below that at 47. And traders, this is going to be a technically data-driven week with the jobs report on Friday, Fed minutes being released on Wednesday. Of course, add to the mix the meeting between President Trump and China's president on Thursday and Friday in Florida. We could see some real fireworks develop, especially in the equities markets. The key number to be watching in terms of downside support is got to be the shorter-term 50-day moving average. We have been trading above that for the better part of a week, and roughly at the beginning of last week, we actually saw this market test this particular price point and then move higher off of that. And so traders, as I said, my recommendation for those still implementing long positions in gold to maintain those positions as well as our current stop placement. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.